Options traders and Cobra trading students, this is Cobra One giving you guys a recap on December 3rd, 2019 and things to look out for into tomorrow's market. So let's hop into it. Market in a minute. SPY closed down 0.67%, locking in another distribution day alongside the NASDAQ on China trade war fears. That makes 5 on NASDAQ and S&P 500. One more will put our market under pressure. However, we did close off and finish off the worst levels of the day. The dollar closed below the yen and the euro. Gold closed up 2%. Bonds led the market with positive ticks to the upside, and crude oil rallied nearly 1%. Futures market in S&P 500 do appear to be slightly elevated at this time of recording. However, anything can change overnight. And by the looks of it, actually, we are beginning to see downtick in our current actual market. However, we just have to wait until the open and pre-market bell to see, exactly where we will be placed within our market. Closing up, we did close off strongly, which shows that, buyers or potential for profit taking off of, all-time highs from this 315 mark. Buyers came in and stepped in after the sell-off today because of Trump's word and tweet regarding, a display of possible doubts and actual coming into an agreement with China with our phase 1 deal. However, it shows that anticipation from buyers actually are upholding this market right now, and there seems to be a tad bit of buying and support from investors that keeps good faith locked in for this actual market. As a contrarian trader, I'll tell you, I am leaning towards this market actually snapping back and pulling back. If we review the S&P 500 and just look back overall for all these times that we actually did pull back, we can see that every single time we do, or the S&P 500 does tap into resistance, there's a divergence and then a further sell-off. Okay, here we are. We hit all-time new highs. Okay, divergence for a couple of days, and then a sell-off. Here we are, tad bit up here, right here, retouching this high right here back in early September of this year before a minor sell-off. And then as we extend into new higher gains and 52-week highs, we are seeing a further snapback. So one thing to keep in mind is that, this is pretty much the same thing and same play that we've seen over time and over again. It's that, usually there's a time period of when a divergence occurs before we actually see a further snapback or a sell-off. The rubber band effect, or the key term that goes along with it in the saying, is that the further we extend, the harder we pull back. So being that the market is up over 24% for this year from the last previous highs in September, we are far out extended right now. We can look towards and anticipate a further extended turn or turnover coming our way. However, we would just have to wait and see. Bonds and TLT interest rates, actually, we hop on board and take a look at TLT. This was a great trade that we entered into the day prior, yesterday, and we had a gap up after today's sentiment and fears related to the China trade war doubts. Okay, one thing to keep in mind is that I know a couple traders are long in TLT in the room. I've taken my profit. I took a 70% return on investment profit today. However, if our market continues to grind up higher, then we'll see TLT, pull back. If our market continues to move into a fear sentiment, we can definitely see bonds on the uptick as well as interest rates. And the iShares TLT continue to tick up higher. We can likely see a repeat back up to all-time highs of 146. Okay. One thing that is actually holding our market up as of right now is our financials. Financials also did close off the worst levels of the day. However, we did close and end the sector overall red. Out of all sectors within the market, okay, we have our financials, our consumer discretionaries, staples, our utility stocks, energy, industrials, home builders. Financials were the worst performing within the market as of today, closing below more than or nearly 1.5% off of all-time highs, snapping back. This is the move that we were actually looking for. Although we can never anticipate when the moves will occur, we know that we can always place the trades on into the areas of resistance and anticipation for moves that we've seen. So based off our financial sector, if our financials continue to move down lower, we will actually see the broad market continue to move down lower as well too, and sell side activity aligned alongside our financials. It's not our tech, it's not our Apple or our Microsoft, but it is indeed the financials and interest rates and bonds that come into play as well when fear sentiment begins to set in. Another thing that I want to cover with you guys is I've mentioned it time and time again. However, we actually saw our volatility index. If I clear this and we take a look at what's occurring, our volatility index futures have actually been on a steady grind lower. If we look at our VIX, what you'll notice is that from all-time highs, we continue to grind lower into this $11 or $12 mark, and eventually what occurred was a hard snap and a spike in volatility, which had an effect on the broad marketplace. As the S&P 500 moves inversely with the volatility index, as this spiked up today, we also saw the S&P 500 sell off. Now, this could also be due because investors were taking profit off of the market from a 17-week run up to new highs in the market. Volatility being sold off into the lows. As volatility continues to get sold off into the lows, eventually when volatility reverses, those firms or investors who actually sold volatility against the market now need to cover, and now you're seeing multiple orders being covered, and which results in this spike that we see up to the 17. So I actually looked at this trade today and saw that I never wanted to sell volatility down here at the 11 or 12 mark. However, it did look appealing to sell nearly at the 17 mark. I did sell volatility futures, and I do plan to take actual volatility down back to the lows or into support around the 14 or 15 level. But we shall see where our market actually moves towards. As we take a look closer into that actual VIX volatility SIBO index and draw a trend line out from the highs of August leading up until October and extend this trend line outward, today's session resulted in an inflection point retesting our all-time highs at these key points in time. So this offered an opportunist moment for those who were looking to actually sell volatility in the volatility futures or the VIX itself to actually take for a move down lower for people who were actually feeling fear sentiment. Again, our market closed off the worst levels of the day. Therefore, our VIX volatility ended up closing down off the best levels of the day, moving inversely with the market. However, keep this in mind is that this is a short-term trade for those that did take the volatility sold futures trade alongside with me today in the chat room. I will be looking to capitalize into support, preferably down here at the 12 or 11 mark if it gets there. However, I will be taking profit nearly at the 14 or 15 level. One thing to consider, once again, is that if we do obtain another distribution day within the market on the S&P 500, NASDAQ, or New York Stock Exchange, we will be pressurized into undergoing markets that are substantially set and lean towards further sell-side activity. Further to stance on volatility, let's dive into the market in a minute, sector leaders, and where our investors have been allocating their cash capital throughout the last 7 days. Feeling the fear and volatility index is increasing, we've seen investors and big money flowing into real estate sector funds and utility sector funds. We dive in and dissect this by a sector summary. Clicking on real estate investor sector funds, we can see specialty real estate investment trust, that's REITs, outperforming and leading our market as a whole, in terms of where we are and where we stand at today. The reason is because, during times of volatility and turmoil, investors are fleeing from a risk-on environment and taking profits off the table, reallocating them into safer sectors where they can put their money. Now, based off today's actual action on the open session, we gapped down $2 closing at 311 yesterday, opening up at 309 and selling off a further $2 or 2 basis points on the open market before closing up off the worst levels of the day. However, we can see that there was a high volume change, and specifically a stock by the name of Safe. If we actually take a look at the actual name itself, stock caught a high bid from the open session from 39 and closed at 42, above 6%, nearly 6.5% on the day. So this is something to keep on watch. If our market continues to sell off or be lean towards selling off, we can actually see investors continue to bid up the utilities and real estate investment trust, specifically the real estate sectors. Bear in mind that today's action was more so as a profit-taking standpoint. In order for this market to actually cave and be set on a further sell-off and sell-side activity, we would need our XLF and the financial sectors to continue to grind down lower, bonds to tick up higher. Days like this, where we are actually getting a little bit of a spike in some of our real estate investment trust and utility sector names, bear in mind that yes, we are higher, hitting new highs within these specific names that are leading the sector and market overall for the day, but we are up on lighter volume. So that is something also to consider, is that temporary spikes do not usually last long unless we have follow through, which occurs next to the days where we are hitting these highs. So nonetheless, for this market overall, we must remain vigilant and resilient in what occurs and pay attention to the internals of what's occurring within the market. Diving deeper into our actual internals, when we look at our trend, this is our ARM index, which is also known as the short-term trading index. The trend tracks advancers and decliners ratio over the advancers and decliners within the market compared to value. What this does is it shows you inversely how correlated we are when we are looking at a market upturn and downturn. When we are below the 1, markets are fairly healthy. When we are above the 1, markets are a little bit volatile and it can become even more volatile. Anytime we do touch into the 0.50 mark, markets are overbought right now, and we can expect a turnover. Anytime we are above the 3 mark, markets are well oversold, and we can expect a snapback. So based off the trend and the internals within the market, advancers and decliners, we can see that we are still holding above the 129. However, with futures down right now, we could possibly see further follow through leading up into tomorrow's market, varying on how our foreign and global markets are performing, Japan and Euro, respectively. So I will leave you guys with a trade that I had opened up today and added on to a position which I've held over the last 4 weeks. Activision. I'm not much of a gamer, and nor do I have any bias towards that actual gaming industry. However, seasonality does point to retail sales usually performing within the Q4 mark. And also, if we actually take a look at the S&P 500, December overall has been a bullish month in general for the marketplace historically. Last December, we were not so bullish. This December, we are kind of in the limbo between what occurs and whether or not trade tariffs will actually start and be implemented on the 15th of December. To further my standpoint, going back to ATVI, most of my portfolios lean towards the short side as a contrarian. However, I did take one position in ATVI for a possible swing trade, shall I say, over the next 3 to 4 day period. And the reason is because we can usually see, based off of this chart right here and the indicator below, the squeeze indicator shows us that anytime we do come close to the 0 line, okay, we can usually expect a spike in price or price action beginning to be squeezed out into newer highs, at least before we begin to revert back down. So here we are coming again, once again, into this red line. Okay, we squeeze out the shorts, the stock has a nice spike and continues up higher over the next 7 to 10 days. Okay, this was actually a nice move from 51 up to 57. Here we are once again coming in to the 0 line, okay, where we actually see the stock at 54. We can anticipate a move possibly back up to these highs of 57. The point of inflection where I do plan to take profit, if we do look at the weekly chart, we can also take a look and go back closing out this indicator so we can just have the chart itself. And the stock has actually been, when we look at the overall bigger picture, has not been performing all so that bad as most investors would foresee. We can see a cup and a handle base being built for a possible furtherance to the upside. Okay, so here we are, cup and handle, we pull back and then we move to the upside. So I am bullish on this stock. For those that actually are not so sure about our marketplace or the actual stock itself, one thing to add on to this as well as a contrarian, if we use our contrarian scanners, is that money flow has been steadily increasing within the actual name from the weekly scale and weekly basis. If we dissect this by a daily chart, we can see that relative strength has been on the rise. Okay, slow stochastics and momentum has actually been at the highs. However, we have not yet correlated or curved back within the momentum box to the downside, and we can continue just as much to continue to ride higher. And money flow itself has been increasing substantially, especially in today's down market and today's action where we saw a furtherance sell-off, and we're seeing a divergence within this specific name. And this play, we see money flow coming in. So what does this tell me is that I do think that we can actually retest at least the 56 area before we actually start to see some sort of resistance that would provide us with at least a 1.5 almost a 2-point move to the upside. And with the short squeeze being in our favor, we can definitely see a higher possible spike in price. So that is your play for tomorrow. That is what I'll be watching. Variant on how our market opens and where we are. That is all I got for you guys, and I will see you guys tomorrow in the chat room.